We got in touch with A Balasubramanian, CEO of Aditya, Birla Sun Life AMC, and Nilesh Shah of Envision Capital, trying to understand their expectations from the budget and what the market really wants out of the budget this time around. Let's hear out this exclusive chat with Nikunj and me.
The last 1.5 years have been a tough year, both from the credit market point of view as well as from the overall slowdown that we have witnessed across all segments of the businesses. A lot of sessions have been going around, and everyone who matters, and everyone actually who has seen the market cycles now actually have been giving a representation to the government and various bodies through CI and FICCI and directly and so on and so forth. So now there is a big realization is there that yes, economic slowdown is there. Therefore, we need to do something different. And what different? Of course, a lot of sessions are also going around. But thing is, somewhere down the line, that I think we also have to see this as an opportunity for India, and especially when global market, global economy also is tending towards some kind of slowdown path, and therefore India actually can come back quite quickly if we actually fix some of the issues that we feel that is the real reason because of which the economic slowdown has happened. So that's something I think my view will get addressed in the budget. Clearly, the expectations are there in the form of touching the taxations and looking at capital gain tax adjustments, and also the look at sectors that can actually revive the growth, whether it is from real estate or from manufacturing sectors or even sectors like textiles, whether I can actually revive the economic growth, both in coming back on the manufacturing side as well as creating employment. There were a lot of expectations are built. Of course, all cannot be addressed in one budget. But having now seen and taken feedback from the multiple people who matters to the industries or matter to the economy, and that's something which the government actually is seriously implement some of them, probably the budget would set the ball rolling, reset the rather economy for the next round of growth.
Nilesh, let's take it from the top, the fisc deficit number, which last time the finance minister did not even mention in her speech, by the way. But this time around, is it a given that it's going to be challenged? And if challenged, for what? I guess that's going to be extremely crucial.
Yeah, absolutely. I think like what Nikunj said, that, every time it's been that, okay, don't cross the red line. But I think this time, essentially, crossing the red line seems to be a kind of a given. Now, the question is, for what do you cross the red line? Is it because of shortfall in revenues, or is it going to be more of spending? And even if it is spending, it's going to be to boost infrastructure, ensure that infrastructure projects go off the ground and you build world-class infrastructure, or is it basically to expand the social welfare schemes? I think that is really where basically the market is going to be more interested in, that what are the granular details which are going in to kind of come up with that magical number of the fiscal deficit. And that's going to be basically the big area of focus for the markets, be it debt markets, be it equity markets, even cues on growth are essentially going to come in from that fiscal deficit number. I think just saying that we'll probably grow at 6 or 7% may not essentially be may not satisfy the markets, but it's going to be that, yes, okay, fine, if you are targeting a 6 to 7% growth, what is that fiscal deficit number?
So a 3.5 to 3.8% kind of range is something that the market is okay with?
Yeah, I think as long as you probably, optically any number below 4, which means that even if it were to kind of go to a 3.9, I think it should be fine. Provided essentially the market sees that a lot of that slippage is going to happen because there's going to be a huge impetus towards infrastructure build-up and getting towards that 100 lakh crore of infrastructure spending which the government has already announced. So I think that essentially is going to be the big number to watch out for.
Right, Bala, one important aspect is for us to understand what is the market positioning. And market positioning, in a sense, will drive the short-term performance. Sometimes good budgets have also met with a sell-off, and sometimes bad budgets have also seen market making a comeback.
Correct.
The mid-cap index in the month of Jan is up 8%. Nifty is sitting at an all-time high. There is an economic slowdown in the country, but stock prices at the screen is telling you a different story.
Correct.
What if this time's budget is a budget where nothing changes, at least on the taxation front? It is status quo. What happens to the market then?
I think I think as you rightly put it, one is expectations getting built up, but the market of course starts building up on the basis of expectations just before the event itself. Now, having seen that, I think people are realizing that the capital gain tax which was introduced has not done much to the government in terms of adding to the tax revenue. I think hardly they would have got any kind of tax revenue. Therefore, having such kind of provisions and not getting the real purpose for which is being implemented, and they're not getting any kind of additional revenue to the government, then what's the point in having that? I think my view is, I think government is looking at such kind of provisions. Is it actually having really a change actually from the government, from the point of view of the revenue, or from the point of view of growth, or from the point of view of getting incremental money into the stock market? I think I would probably assume this thing could be actually addressed in the budget.
You know, I don't want to use the word attitude, Bala, but I think last budget forced us to use the word attitude.
Correct.
The attitude of the government towards who are paying more tax and towards wealth creators. That changed in the last budget.
Exactly.
In terms of an attitude or an approach, do you expect something which could be incremental? You know, every time we've discussed, Aisha, the budget, we've always questioned the assumptions and the final maths. But I want to question the attitude which changed after last budget changed.
So the Aam Aadmi versus rich.
Exactly.
Yeah.
I think the way I see is this budget, as contrary to the last 4 or 5 years of the social related kind of focus was too high. This is the first year budget. I would assume probably the higher focus will be given for the economic recovery. I think the point what you mentioned about earlier on fiscal is at this point important, or actually to drive the capital spending is actually important, even at the cost of the fiscal going up. Probably I would assume that given the fact that credit growth in the country is actually one of the lowest and demand for money is not there, at the same time liquidity is the highest and interest rates are low, I think the best time to actually slip on the fiscal, even if it means that your bond yield is going to go up about say 10-15 basis points. But as long as there is high visibility that comes, yes, government is quite serious about making the public sector investments quite high in terms of building their infrastructures needs. I think these are some of the how you allocate your capital, even if it comes at the cost of your tax not being up to the mark. And that's something which will come. Secondly, from a capital market point of view, so far the dependence on rising resources has been largely through the debt. And what we have seen in the last 2-3 years, high debt borrowing companies are the ones who are the sufferer. At the same time, it's also duty of the government as well as the regulator to create a right environment for them to raise equity capital. And the equity capital will come only if we keep the equity market at a good state. Then only the equity capital can be raised. Therefore, from a corporate's point of view, equity market remaining buoyant is important. Therefore, whatever needs to be done in order to get that back is something in my view will be done in the budget.
Nilesh, on taxation and capital markets, we've all seen as to how the corporate tax rate cuts sort of put a floor to the Nifty. Could the same happen if indeed LTCG is tampered with? Now, I know expectations are anywhere from it getting extended to 3 years to a complete abolishment. Who knows what's going to come? But in both the scenarios, what could be the possible market move?
So there are two things. I think, some of these taxes act like the cholesterol in your body. So imposition of the LTCG was essentially like having bad cholesterol. Okay, and you need to basically address that issue. It does not necessarily mean, therefore, that that will lead to good cholesterol or not. But essentially, this is something which was unwanted. And I think the first philosophy of the budget, I would expect it to be that do no harm. The last two budgets, be it 2018 or 2019, 2018 imposed LTCG, 2019 imposed basically the tax on the super rich. So I think the first principle, which ideally I would expect, is that don't do anything like that. Number one. Number two is the LTCG, imposition of the LTCG tax has not helped you in any way. Forget the kind of impact it has had, especially on the mid and the small caps, but nevertheless, eliminate that. I think that is something which will send a lot of right signals, especially to the international investment community, because I'm no tax expert, but I'm assuming, or I'm told that if you are, for example, a foreign investor in the US equity markets, if you are a foreign investor, you do not pay LTCG on those gains out there. So similarly, I think some of the foreign FPIs will also be expecting that remove this LTCG, and I think that essentially is the big tax reform. If you call it also a tax reform, it's something which is basically the market is really looking forward to, and I just hope that this budget really obliges the market on that front.
See, Asha, the way I look at it is that you ultimately need foreign capital. And when you need foreign capital, do you want to make life easy for them, or do you want to make life tough for them? That's the most important narrative. Second, for corporates for taking risk, whether it's entrepreneurs or risk takers, what is really the whole proposition to increase the profit pool of India? That messaging is important. We can endlessly get into this scheme, this yojana, that yojana, this grant, that grant. I think that would be there. But for me, I don't know if you guys agree with me. For me, the messaging is important, and which got lost in the last budget.
And Nikun, I'll just build on from that. The Prime Minister himself, I think when he went to the United States, I think there he publicly said that, taxation on equities would essentially be brought at par with whatever are the established practices world over.
Globally, yeah.
I think he has already said this. Even at the 15th August speech of his, he said we need to respect wealth creators.
And the gap between personal tax and corporate tax, Bala, is so large that somebody needs to address this gap.
Yes. So to that extent, I think that philosophy now seems to be there. I think these are coming in from the public statements. It's just that one is now looking forward to the budget to essentially basically see that there is really now the government who's going to walk the talk on this front or not.
So second, which of course which I like this time is, so when you prepare a budget without connecting to the market players, or prepare a budget after understanding what is the ground level reality and see what needs to be done in order to fix some of the issues that's being faced by the country as a whole. At this time around, Prime Minister, I think himself is spending time with all the market participants. It's something is a big clue for a budget which can have one stronger messaging. Second is showing concern of the economic slowdown that we are seeing, and take steps actually that could actually revive the economic growth. May not be in the near future or maybe 6 months or so, but at least over a period of next 1 year give a visibility for the economic growth to come back. And all these things will come through the taxation adjustment, as well as spend some money in terms of getting the growth back in terms of either corporate investors coming back or the government spending go up.
It's a chicken and egg situation, isn't it? Can you really afford to bring taxes lower? Given that there is a complete miss on direct taxes in GST, the elbow room to do that is little. Can you really go ahead with a solid disinvestment process in this kind of an environment? Well, given where valuations for PSU stocks are, it may not be a very wise strategy. So what I'm trying to understand is that where do you think markets will say, look, we want more, but we will get so much? What is that line between want and being reasonable? There has to be a balance, right? What is that balance? What will make the markets not unhappy, and what will maintain this rhythm in the market? Because even if we stay where we are, I think we should be happy.
Yeah.
So the way I look at it is that I'm not sure how much has essentially been the collection from LTCG on listed equities ever since it was imposed.
That's a low-hanging fruit.
So
which could
I'm
be
just saying
plucked.
is that will do no harm to the government as well in terms of revenue collection. So that's something which can do a lot more good, at least in terms of ensuring essentially that the spirits remain high, sentiment remains positive. So I think it's going to contribute more towards that, and will not essentially take away any of the revenues from the government. In terms of personal taxation, I think even this year, if it's given a go by, I think that should be fine, saying that, look, we have a challenge. Let's
You're
not
happy
think
42%.
It's not a question of being happy. What I'm just saying is, if it gets,
So
if
are
it
you?
probably,
I'm not in that bracket.
I think nobody's ever satisfied with any of the taxes which is imposed on them. I think that's a given. The question is, I think that you are at a tough situation right now. Of course, if it's lowered, great, wonderful. That's a huge gamble the government is saying, and probably the street might look at it positively, saying is, here is a confident government which says that I'm lowering taxes, but lower taxes will result into higher revenue collections for me. So that would be a great signaling, but I'm not too sure whether that will be done or not. Versus that, the LTCG is a way more easier option, number one. Number two, things like buybacks, encourage buybacks. I mean, I think there are enough studies which says that the US equity markets over the last 10 years have had a remarkable sprint or a huge up move, and a huge contribution to that has come in basically from buybacks. I think the Apple as a company, if you look at it, over 3-4 years, there has been no major growth in their earnings. But look at the stock price. It's a prime example. It's putting your capital to work. So if there are any hurdles, and I know for a lot of companies, in fact, especially a lot of the smaller companies, when we speak to them, saying you are sitting on 200, 300, 500 crores of excess liquidity, why don't you essentially return that money? And I think the refrain which comes essentially is that, look at the taxes if you do a buyback. Does it make sense? So I'm just saying is, remove those kind of things so that essentially money goes back to shareholders, which in turn are also consumers, and that money will probably go back as investments, or it will go back into the consumer market. So I think these are some of the things which are not contributing in a significant way to revenues, but do them right. I think this is very, very important.
You know, Aisha, IT companies use this entire buyback route to pay back so much cash to their shareholders. I think TCS did 2, Infosys did 2, Wipro did 3 before the law changed. I mean, it's like, why do you really want that when you want money to come back from a balance sheet which has been invested in the government bond or in fixed deposit in State Bank of India back to the consumers? I mean, today if you have to make a case, LTCG, change or extension, and buyback tax. These are 2 low-hanging fruits which can be plucked. And I don't think any companies would have really done buyback after the law
Yeah, none.
Absolutely.
I think
Yeah.
TCS was before it was implemented.
Second is, Nikunj, even the sector which is one employment generator, as well as the whole ecosystem gets benefit out of the sector is the real estate sectors. While one can argue that the prices are high and therefore there has to be a drop in prices before we actually start making any kind of change in the regulation or maybe any kind of tax minimum one has to give. But given the fact that the sector has got multiple way of giving growth back to the economy, that the sector has to get addressed, which is nothing but to push up reduce the inventory and push up the sales volume, even if it comes at the cost of an incremental growth, even if it comes actually the lower taxations, as long as it is able to actually create the whole ecosystem much better, that's something which I think can be addressed to the budget.
So more than equity market, real estate market perhaps needs a bigger reform.
Absolutely.
That's a
Though
very
there
good
is
thing.
chatter that that's going to happen. The other thing on taxation is there is a heightened, buzz in the market that personal income taxes will be reduced in the 5 to 10 lakh rupee range as well. Now, that's the segment which has the propensity for immediate spending, and that's going to trickle down to your consumer staples. If that were to be the case, do you really think this consumption, which has sort of been a bottleneck, that's going to get kick-started?
I think today, if you look at the entire two-wheeler space or car space, or even for buying actually the consumer durables, there has been a slowdown. I think every industry and these players are actually expressing concerns. How do you address that? Boosting actually income in the hands of middle class populations. Second is, if you more the tax you to give, even up to say 15 lakh rupees or 20 lakh rupees kind of income, the more the saving that comes actually helps in terms of that making the EMI payment. Therefore, that if it is addressed, the kind of population that address is like the working population is quite large. Second, of course, they'll also get the boost of this, which of course government doesn't include in the budget, which comes from rural income going up because of good monsoon leading to good crop output. Therefore, these two combinations, I think, can help in driving the economic growth. I think as per the numbers, it's not more of rural income actually the issue. Today, the urban income has actually gone for a toss, and that need to get revived to get the economic growth back.